So today's lesson comes from Ahmed. Thank you for sending this in. The first question here is the most advanced question I've ever received for PineScript, which is how to detect harmonics and chart patterns in PineScript. This is no small task. In fact, this is no small task for any programming language, but especially PineScript. Detecting harmonic patterns and simple patterns even in any coding language on your charts is incredibly difficult for several reasons, most of them involving discretion and how you define a pattern. For example, if you're detecting a bat pattern, if I open up some charts and try and find a bat pattern really quickly. So here's an advanced pattern formation, a bat pattern. We have the X to A to B retracement that hits the 50 and doesn't exceed the 618, and then we get the 382 retracement here, and then the 886 completion. Now it's relatively easy for me to identify this by eye, but if I'm trying to code this, there is just so much I need to account for in order to accurately identify this pattern. First of all, where is my impulse leg? If I delete that pattern, where do I start drawing my impulse leg? Is it from here to here? Or is it from here to here? Or from here to here? And then the retracement, is it from here to here to here to here? Or is it from here to here to here to here? And then we have a totally different pattern forming. It's just really incredibly difficult to tell a script what price action is meaningful to it and what price action is not meaningful. So what is an impulse leg? Is this an impulse leg? I can say yes, according to my human eye, but what about in here? Is this an impulse leg? Some people might say no, some people might say yes. And so it's just really, really difficult to identify advanced pattern formation, harmonic pattern formation. It's not impossible, but I would suggest that other languages are probably more appropriate for that sort of analysis. If you're looking to automate advanced pattern detection, especially if you're looking to automate your trade execution on those patterns, you're probably better off using a language like Python or some other object-oriented programming language that has a little bit more power under the hood than PineScript. PineScript is designed as a simple language, and so it has a lot of limitations. And one limitation is that it just makes it really, really difficult to analyze advanced candlestick patterns that involve dynamic amounts of time and other dynamic factors. That being said, I did find a harmonic pattern source code in the TradingView script library that does contain source code for detecting advanced patterns and simple patterns like double bottoms, A, B, C, D patterns, that sort of thing. But if we scroll down to the source code, it's open source, so I'll leave a link below this video for you guys to go and check out if you're interested in learning this. It is in version 4 of PineScript, but a lot of the concepts will be the same as version 5, just the syntax will be slightly different. The mathematics will be the same, and the way that this script author, he who must not be named, who is a famous PineScript coder on the TradingView platform, has written this code, and as you can see, it's not simple. It's not a simple matter to achieve. It's kind of outside the scope of the mastery course, me teaching you how to build a script like this. The point of the mastery course is to teach you the tools to go out and build your own scripts. I've already taught you how to use arrays, lines, how to analyze candlestick patterns, use some of these basic math functions, how to use some of the basic technical analysis functions to detect certain patterns. From here, it's kind of on you guys to go out and build your own scripts using the tools that you've learned here. I will do my best to produce examples and help guide you with certain concepts in Pine, but to build a 500-line script is something that I would typically be paid thousands and thousands of dollars to do by traders. So I really just don't have the time to build out a script like this. But if you guys want to learn more about the various methods you can use to identify advanced candlestick patterns, I'll leave a link to this source code and this sort of write-up below this video. But for today's video, we're going to focus on a simpler question that was asked, which is how to detect double tops and double bottoms, which is still an extremely difficult task to achieve in PineScript, but I will tackle that in today's lesson as best I can. It's also not possible to scan the entire Forex market in one script, unfortunately, which is point number 4 here. I wish this was possible. I would also benefit greatly from this functionality in Pine, but unfortunately, as of recording this, this is not possible. Your script can only run on one market at a time, and so you need to cycle through each market individually. All right, so before we begin, I thought it might be interesting to walk you guys through my thought process when I'm trying to solve a problem such as detecting double tops and double bottoms. Now, the problem with trying to detect simple patterns in the markets, from trend line breaks to flags, pennants, double tops, double bottoms, is that there is actually a lot of human discretion involved in defining what constitutes a valid pattern. Right now on my chart, I see several potential double tops that our code could detect. I've already drawn one up here, which is the one I'm going to try to analyze in my code to get a prototype script going. But if I zoom out a little bit and I put on my draw tool, depending on how many bars are allowed to exist between each top, each peak, we could have several potential double tops here. There's one here, there is one here, there is one here, and then there is also the matter of what rules you use to govern what a double top is. A lot of people would class this as a double top. If I throw my bar replay tool to this bar here, to some traders, this is a valid double top that they would enter short on. And in fact, it was this bar here that is actually the double top, because it touches the bodies of these this initial high. For many traders, this is a valid double top right here. For me personally, I wouldn't trade this. I need further confirmation. I need to see usually a bearish engulfing candle following the retest. So all of that is just to say that there is a lot of subjectivity involved in some of these candlestick patterns, which makes it extremely hard to come up with a one-size-fits-all solution to some of these questions and challenges in detecting price patterns. Remember that our code is very dumb. It needs to be given very objective, detailed instructions on what it's looking for. That can be quite tricky to do with some candlestick patterns, especially candlestick patterns that involve dynamic time distance between them, or in other words, a dynamic distance of bars between each, the initial top and then the retest. But anyway, I'm going to do my best to come up with an example solution to this problem, and let's get started. The first thing I'm thinking might work here, the first attempt at solving this challenge that comes to mind, the first technique we can use is to detect the highest close over a given look back period. So I'm going to start with 10 bars. So I'm going to find the highest close or the highest open over the past 10 bars. And then I'm going to save the highest high of that bar. And then I'm going to store that information in a VAR variable. And then I'm going to wait X amount of bars to print in between the initial top. And then on the retest, I want to see, at first I'm just going to detect a simple double top, which would be this bar here, which retests the bodies. That's what I'm going to look for. So we detect the highest the highest close or open over a look back period. We save the high of that bar. Now we have a range to look for. We have a zone to look for retests in. Once we get a couple of bars, I might start with 3 bars. Once we have 3 bars print from that initial top, then the script will begin looking for a retest of that initial high in this zone here. And if we get that retest, we'll draw a shape above it to identify it as a potential double top. And if the bar, if we get a close above that initial top, then we'll invalidate that pattern and start the whole process over again, looking for a new double top. So let's get started coding this solution. I might pause the video here and I'll come back once I have some code written and I'll explain what I'm doing in the code. One other thing before I do that I should mention is there is also the case of market conditions. In other words, personally, I would trade this double top. I like the look of this double top. We get a bearish engulfing candle right after the retest. We didn't have many bars print between the initial top, but in this particular case, that would be okay for me because we are at a level of major resistance. Major structure looking left. This is a zone in price that pushed price around pretty heavily. We've come back up to retest this high over here, and we've put in one top, a pullback, a retest, and the retest has failed. This is a pattern I would feel comfortable trading. But if it just looked like this and we had a double top in the middle of nowhere, or like this, for example, we've got a double top down here, I wouldn't trade this. This is a meaningless pattern to me because it is not forming in conjunction with extra market conditions, extra layers of confirmation. But anyway, we'll cover detecting candlestick patterns within zones in a different lesson. It's not particularly difficult. All you need to do is add some settings to your script that allows you to define a price zone, so 2 prices on the price scale, to detect a candlestick pattern within. But anyway, let's get coding on this initial version 1 of trying to detect double tops. All right, so after several hours of playing around with this script idea, this is the best I can come up with at the moment. So I have a script now that is detecting double tops and double bottoms. It's not perfect, it's far from perfect, but it's the best I can do with my time today. I haven't got a lot of time. I've spent a lot longer than I should have working on this solution to this script. But I'll walk you through the code and explain what's happening here. So I've added a couple of options to this script, confirmation types in particular. So by default, it's set to none, which means that all the script is looking for is a top to form and then a retest of that top. If you click this drop down box and select one of these, like reversal bar, now the script is waiting for that initial top, and it won't detect the double top until we get a reversal bar. So a red bar for double tops and a green bar for double bottoms. And then the final option there is engulfing candle. That's how I like to trade double tops and double bottoms. I like extra confirmation since it's typically a counter trend trading setup. Because I'm not particularly a counter trend trader, I prefer trend continuation and momentum trading. If I'm going to trade a reversal pattern, I need a lot of confirmation to make it worth my while taking the risk of going against the trend or momentum. Anyway, let's break down the source code really quickly, as I don't have a lot of time left today to get through this. Here are our user inputs. We have a look back period for looking left to find swing highs and swing lows. We have a minimum bars. This is the minimum amount of bars that must print between an initial top. It's set to 3 by default. So we need at least 3 bars between our first high before we start looking for a second top. We have our confirmation type I just went over. We also have detect double tops and bottoms, so you can turn off one or the other in here. I mostly made that for debug purposes to make it easier to analyze the code. And then we have this draw zones option here. If you turn this on, it will just show you what the script is looking for. So this red zone here is the double top zone, and we're looking for that second top. The green zone is the double bottom zone, and this is where we're looking for that retest. So that's for debugging purposes as well. We also have these little faint arrows. They represent the initial top or the initial bottom, so you can see when the script detects what it thinks is an initial top, and then it's waiting for that retest. And initial top is a Boolean variable that is only set to true if the current bar's high is equal to the highest high over the past X amount of bars, which is our look back period in the settings, 10 bars by default. Then the next thing we do is detect the initial top. So if this initial top, if the current bar's high is equal to the highest high over our look back period, all of this code gets executed. First, we detect which candle body was higher on the previous bar. So was the close higher or was the open higher? Then we check the current bar. Is the current bar's close higher than its open? If so, then we set current high body to the closing price. Otherwise, we set it to the open price. Then we set our initial top body, which is a VAR variable, to this here, where we check, is the previous bar's highest body higher than the current bar's highest body? If so, then we assign initial top body to previous high body. Otherwise, the current bar's body becomes the highest body. The reason for this is, here's an example here. So we detect an initial high, but the body is all the way down here. That's not how I personally detect double tops. I look for the range between the highest body and the highest high over this sort of area here. So that's what this code here does. It makes sure that we're analyzing the right candle body against the candle swing high. And then we assign our VAR variable, our persistent variable, to the current bar's high. And we reset our bars since initial top counter to 0. Next up, we detect if we've had a violation of the initial top, and if we have, then we reset our bar counter so that we stop detecting the second top. So if the current bar's closing price is greater than the initial top high on the previous bar, if we don't have this historical operator, then this check will never pass because if the current bar's closing price is higher than our initial top high will be the high of this same bar, and a bar can never close higher than its own high. So we need to check the previous bar's high. If this is true, we reset our bars since initial top counter to 0. And if this bar is not an initial top, and the initial top is not yet violated, so we haven't closed above that initial top yet, then we increment our bar counter by 1. So we add 1 to our bar counter, and we use the bar counter later to validate whether we've had enough bars print between our second top. And then we also have a check here that says if the current bar's closing price is greater than our initial top body, or the current bar's open price is greater than our initial top body, then we adjust the highest body. So let me find an example of that happening. Here's one here. So this is an optional thing. You could get rid of this if you wanted to. If I comment this out, have a look at what happens to this price action here. Now, when we make a swing high, our body is drawn from that high. If I uncomment this code, when a bar prints a higher body within this zone, that becomes our double top zone. So now we're waiting for a retest of this zone, not this zone. That's a matter of preference and how you like to trade if you want to get rid of that check. The next thing we do is find our actual double tops. So we detect failed retest / rejection at our initial top, also known as a double top. So I create a standard Boolean value here called double top, and it's set to false. Then we check if the current bar is high. So let me zoom in here real quick and reset my settings. If the current bar is high, is greater than or equal to the initial top body, and the current bar's high is less than or equal to the initial top high, and the bars since our initial top is greater than our minimum bar setting, so 3 by default, and we have detect double tops turned on in the settings menu, this option here, then we have a valid double top, and we set double top to true, and we reset our bars since initial top to 0, but only if we have a lower high. So if the current bar's high is greater than the previous bar's high, then we keep our counter going. The reason for this is for when we have confirmation patterns turned on. So if I set this to reversal bar, if I didn't have this check in here, then what would have happened is we detect our double top here, and then this bar here is not a reversal candle, and so this whole double top pattern would not be detected. But because I made the script only reset our bar counter if the current bar's high is lower than the previous bar's high, it allows the script to detect a deeper retest of the high followed by this reversal candle. And if I zoom out and turn off double bottoms, you can see that it is detecting double tops. It's not perfect. It does miss some because of the way I've written the code. But that is a problem with writing code like this, is you cannot capture every single candlestick pattern on your chart without introducing a significant amount of false positives, at least not with a lot of complexity in the code. And quite frankly, I just don't have time to do that for this particular script, because this is not something I would typically automate in my analysis. I prefer to identify double tops and bottoms and simple candlestick patterns by eye. But this lesson is just supposed to be a template, just an example of how it is possible to, with a bit of creativity, detect some of these patterns. Anyway, moving on, we then check for confirmation. So if we have confirmation set to none, then all we are looking for is that retest. So an initial high and then a pullback, or a couple of bars passing between the initial high and then a retest of that high. If we set it to reversal bar, now we only set double top confirmed to true if we have a double top and the current bar closed bearish, so it closed lower than it opened. Or we had a double top on the previous bar and this bar closed bearish. If either of these conditions are met, then we have a double top confirmed, and then we do the same thing with our engulfing candle. Do we have a double top on the current bar or the previous bar? And do we have a bearish engulfing candle? So I could actually merge these two in here the same way I did with the engulfing candle, and that makes the code a little bit tidier. And then once we've confirmed that we have a double top, we reset our bar counter to 0, and the whole process starts all over again. And when we detect a new highest high over our look back period, this whole process starts again, and we keep saving our values and analyzing price action until we get that second retest. Then we have our double bottom code, which is identical to the double top, except everything is just flipped. So all of our operators are flipped. We're looking for lows instead of highs. Apart from that, everything for our double bottoms is identical. So in our confirmation code, we're looking for a bullish candle or a green candle and a bullish engulfing candle. Apart from that, this code is literally copy and pasted from the double top and just adjusted so that everything is flipped around. And then down here is our drawing code. We draw our shapes. We plot a shape if we detect an initial top, but only if we have draw zones turned on. If draw zones is turned off or we do not have an initial top, then this plot shape will plot NA or nothing. So if we come up and turn this on, now the script is showing us the zones that it is detecting and also drawing our initial top shape and initial bottom shape. And then if we have a confirmed double top or a confirmed double bottom, we draw an arrow that is bright red or bright green to show that the double top is confirmed. Then I fill our zones, so I just create 2 plots between our initial top body, initial top high, and 2 plots between our initial bottom body and initial bottom low. I set their color to NA so they don't actually draw onto the chart, but I then fill these plots. So I use the fill function to plot between these 2 plots so that we can actually visually see the zones that the script is analyzing. That's purely for debug purposes, just to make sure that the code is doing what I think it's doing and to make it easier to see what my code is doing. Then I also have a commented out line of code here that plots how many bars have printed since our initial top. I left this line of code in just because it's for debugging purposes. So if you run into a problem, you can uncomment that, save the code. And now there'll be a blue number up here, somewhere there, that will tell you how many bars have plotted since that initial top. And then finally, at the bottom of the script, we trigger some alerts. So if you want to use this script to alert you when there's a potential double top or double bottom unfolding, you can come up to the alert box, select this script, and select double tops and bottoms, or double bottoms and double tops separately. Just keep in mind that the alert will only fire if you've turned these on in the settings menu here. And that's it for this particular script and this particular lesson. Perhaps I'll revisit this in the future when I have more time to play around with this idea. There are multiple things we can do with this. For example, I have my, where's the indicator button here? Dynamic structure indicator. If I throw that on and hide this indicator, you can see that this script here is detecting structure. It's detecting support and resistance. So here is a resistance level. What would be interesting would be to adapt this double top and bottom code to detect double tops and bottoms within these zones. So here's a resistance zone. We have a double top here. Here's a resistance zone turned to support. And we have, and depending on your rules, here's a double bottom in here that tests that zone. Initial bottom retest. If I turn on my script, it did actually detect a double bottom in there. So we could significantly expand on this idea. I'm not going to do that in today's lesson because this is not something I'll be using in my own scripting. I need to be careful with how I answer questions in this course because a lot of traders try to take advantage of my time to get me to write scripts for them. That's not what this course is about. This course is about teaching you tools so that you can go out and build your own scripts. And so while I'm happy to do my best to demonstrate certain techniques, I don't want to spend too much time building scripts for traders if it's not something that I'd be using in my own trading. So I'm going to wrap this lesson up here. I hope you found it interesting. The source code will be below for you to play around with and tweak and adjust to your preferences. If you're interested in getting more practical scripts, such as the source code to this dynamic structure indicator, you can find the source code to every script and every strategy that I've ever written in my indicators and strategies course. Now, I'll be back soon to answer more of these questions. I do have a lot to get through, so please bear with me. There's been a lot of questions. And just again, a reminder, I'm not here to write the scripts for you. I really would encourage you guys to try to write these scripts yourselves with the tools that you've learned so far, but I will do my best to try and create examples for anything that hasn't been covered yet in the course. But I'm not here to write the scripts for you. I'm not here to build indicators and strategies for you. I'm just here to guide you on the concept so that you can go out and build your own tools instead of paying a high price for others to go out and write the code for you, which is typically what most traders have to do. But for now, I'll wrap this up here. Thanks for watching. Good luck with your trading and your coding, and I'll speak with you in the next lesson. Take care.